Hello, everyone, and welcome to today's daily major markets update for Wednesday, the 13th, 2022. Inflation is coming in hot, 9%. That's all nice and dandy. I'm not an economist. I'm not an inflation expert. It's quite a lot. As usual, the Federal Reserve is behind the curve. It rhymes nicely. But we are just going to look at the price charts and see what they are going to tell us. I'm going to add another option to the mix, but the bulls are placed on watch. This just shows you how complex the current price action is since the June 17th low. Yes, I wish markets were easy. They are easy when they're in a bullish uptrend, but if we are dealing with a B wave of potentially a larger corrective bounce, then please remember the correction of the correction is the most complicated price pattern you can find. B waves can be zigzags. That's what we always hope for because they're simple: an A down, a B up, and a C down. They can be flats, which are more sideways. They can even be triangles or any combination thereof. Okay, so there are a plethora of different B waves available to us, and that really makes the market very difficult at the moment. Regardless, always listen to Jesse Livermore's 21 trading rules. Please remember, I'm no God, I'm no prophet. I do not get it right. Nobody gets it right all the time. It's impossible. It's absolutely impossible because you're dealing with a dynamic, stochastic, probabilistic market environment. That's all there is to it. So let's go straight to the charts. I'm going to start off with the Nasdaq 100. All right, the Nasdaq 100 last week broke out from this potential, again, it's a pattern, potential diagonal pattern. Okay, this is what we have. It's the potential. It broke out, it held for 2-3 days, and now it retested the breakout. You can see it at the lows today, it was right at the trend line. I haven't moved the trend line a single inch, and we're right at it. So it is technically and currently holding the breakout, but just by the skin of its teeth. That's why I said the bulls are placed on watch. Because if we break below 11,300 on a Nasdaq, I think 10,000 is on tap. Nothing has changed since last time. We must clear the 12,300 level to target 12,900, and we must clear that level to target 15,300. Okay, so above 12,300 can target 12,900. Above 12,900 can target 15,300. That's as high as I want to go. We haven't even cleared 12,900, 12,300 yet. Okay, we tried it and we failed utterly, and we're retesting the breakout. So the bulls are placed on watch. This is why you always have to have stops in place. Regardless if this is a pattern, it's a potential pattern. It's not there until fully confirmed. Okay, that's why you always have to stops in place, because there are no guarantees in life. Please remember, all the indexes are below their 50-day and 200-day simple moving averages, so never ever go into a trade with a full position. I would say make sure you go partially in and see if it works out. Here's the S&P 500 daily chart with the same type of wedge pattern. And as you can see, this wedge pattern hasn't completed yet. We still have no breakdown. And in fact, we are below all the moving averages on the Dow Jones of S&P 500. So also here, nothing good to say about this index yet. Very simple, right? We're pretty much back to where we were in early June. So we have a month of you know what, check and you know what. So that brings me then to the Dow Jones. Okay, I just wanted to show you the daily S&P chart to show you that we're below the simple moving averages and still haven't completed this potential wedge pattern. This is the Dow Jones, and the Dow Jones has this ending diagonal option, or actually a leading diagonal option, still on the table. So far, we bottomed here early July, about a week plus or so ago, and rallied, but that rally has failed. So we might be in a subdividing B wave lower to about 30,000. And from there, we're going to rally for a C wave, okay, to be determined an A, B, C, and then a B, or a C wave. All right, let me put that on the chart, a red C, because black D is, of course, made up of 3 waves, because everything seems to be 3 waves in the price action since the all-time high. So that will then be wave C. That could complete wave D. One can also label this as A1, for example, right? And this is then B2, for example. This is then C3, and this is then D4, question mark. We don't know it yet. And then this is E5. If we get that pattern, then we have a leading diagonal A wave to the downside, and that means we are for certain in the supercycle 4 wave, because that is only wave A of supercycle A. We're going to get wave B of cycle B, etc. Okay, so please keep that in mind. Semiconductors. Semiconductors still look the most constructive, I would say, with a nice rally off today's low. It looks like a reasonably bullish engulfing candle with so far 3 waves lower, A, B, C. But we need to break out higher to confirm that we've done indeed 5 waves down from this early June high. I haven't shared the semiconductors for a while, but it looks reasonably okay, in the sense that we do need to break out, of course. So the breakout level is now there, right? That is 2618. If we get above 2618, based on simple symmetry, because then this is the low, we should be able to target 2862. And again, I say should be, there's no guarantees, but that should be on the table. Then I'm going to look at the S&P 500 hourly chart. Okay, so this is the hourly chart. And so far today, we gapped down at the open and we rallied back, but it kind of looks corrective. The usual parameters remain in place. Below 3640 and the ABC higher is, in my humble opinion, off the table. Above the June 28 high at about 3945, and we can target 4060 to 4260, depending on the Fibonacci extension of wave C in relation to wave A and where exactly this red wave B bottomed. We could have bottomed, and then we've done an A, a B, and a C for a flat wave B, but we need to break out. If we don't break out, we're going to break down. Again, serious warning for the bull is at 3740. Okay, we do not want to lose 3740, because then this accelerated move to the downside as an impulse becomes much more probable and will be confirmed, of course, on a break below the June 17 low. That remains on the table. Okay, those parameters remain exactly the same, and until then, this market can decide to do whatever it wants to do. So we really need to hold 3740. If not, then the accelerated path to the downside of about 3500 in this fashion is most likely. Alternatively, we just completed or are about to complete a flat wave 2 for a leading diagonal wave 1/A, because this wave A can also become a leading diagonal. And these are then the ideal upside targets for wave 3, 4, and 5, about 4150, back to 3950, and then up to 4250. It's all plus and minus, of course, but for now that's the case. This is only operable if we break, of course, above the June 28 high. And we need to do it reasonably direct. Again, below the 3640 level, and we are in our accelerated impulse to the downside underway. All right, so those are really the regular 3 options that haven't changed: an A, a B, and a C for wave B, and then a C, very possible, or the accelerated impulse to the downside, about 3500. Or we have a complex leading diagonal on the way, wave 1, very complex wave 2, and then we get 3, 4, and 5. Lastly, this is what we're going to add to the mix. It's possible a triangular B wave is forming. Okay, this is the triangle that is potentially forming. We don't know it yet. This is the potential. I tell you, as always, the potentials that are in the chart. So I've identified this as a potential. And of course, I don't know this triangle is forming when we're back here in late June. Okay, it's impossible to know. We need about 75% of the price data until we realize that there is a triangle forming because we have enough price information available to make that conclusion. So here is something that we go up, down, up, down, up, or down, up, down. This is then the path, anticipated path for the triangle. Okay, so we go down, up, and then we go down, up, down, a D, a E, and then we take off. Assuming we bottom at around 3,800 for wave B, then wave C goes to 4,080 to 4,280. Okay. There's a serious warning for this wave count and the bulls below this gray trend line that defines the triangle. There's of course a serious warning for the bears. If we break above this gray trend line, then this triangle is not operable anymore. If we break out above this, and of course at any moment, at any given time, we break above the June 28 high, we're going to look for the 4,000 to 4,200s regardless. Okay, so this is a potential. I know now we have 4 different options on the charts. Well, welcome to B waves and welcome to corrective price action. I don't make the markets. I want to see impulses higher. They're the easiest to navigate. I don't like bear markets. I don't like corrections. They're the most difficult price action to navigate. They are what they are. They're choppy, detrimental to most trading accounts, all the bad stuff. But this is the option we have available. And I wouldn't be surprised. This would whipsaw a lot of people. And then eventually we get the breakout. So again, a serious warning for the bulls below this trend line. A serious warning for the bears above this trend line. And at any given moment, we break above the June 28 high, we're going to look to the 4,000 to 4,200s. If we break below the June 17 low, we're going to look for 3,500 on the S&P 500. And of course, 10,000 for the Nasdaq100. And for the Dow Jones, I'll be looking at around 28,000, somewhere around there. Semiconductors still look reasonably bullish with today's candle. If we break lower, of course, this is all going to subdivide into further diagonal type of price action. But these are really the 4 options we have. So I had to add this option to the mix because it is now potentially on the chart. I kind of like it. It's kind of devious. Wouldn't surprise me with all the confusion that's going on. But the market will eventually tell us. So watch the trend lines. Watch the price levels. They remain exactly the same. All right, watch 37.40. We need to hold it. Otherwise, we go back to 36.40. Below that, we're going to go to 3,500. We break out above the June 28 high, 39.45. I think we can easily target into the 4,000 plus to 4,200. Okay, so NASDAQ, same deal. We need to break above 12,300 to target 12,900. We must hold 11,300 or suffer the consequences and break down to about 10,000. All right, so that's all I have for you guys today. Thank you so much for listening. Thank you so much for being a valid premium member. Take care, trade safe, and I see you all on Friday.